Welcome to TradeTheMBI.com. This is Jonas. Report is for the 7th of February. And, the market continuing its move higher, clean with the magenta still over yellow, no real short activity at all. And we finally got that dip of orange coming underneath just the green on the DOC. We do have a rising red, but you didn't get that full bonus push. So that until you see that kind of transition, or at least a move of green over cyan, uh, you can expect a move that continues to battle itself a little bit higher. I'm not looking for it to have any huge impetus at all. It's still just sort of a lot of indecision. But now you have OBM, and then of course we're going to start to get. Well, that was a confirmation, but then you're going to have the latest numbers coming out, and it'll be real interesting to see some of the BLM adjustments and how that's going to work, and are they going to go back and revisit the last 4 years of made up numbers, and this could be a mess. And it's an interesting one because if the Fed goes based off of the numbers that start coming out, then theoretically they'll want to cut, and it would be doing so in an arbitrary way because the numbers were fake from before that they used to adjust things. And you remember when they made that dramatic adjustment of nearly 1 million jobs that never existed, and then the Fed did their emergency 50 basis point cut right before the election. We're not going to be seeing that behavior. I don't think that's in the cards. That was just blatant politics, and these things are changing. However, what's not changing is you can see the pace of the reform intentions now. An interesting thing, what's going to happen to GDP, in that as we start to see significant budget cuts or a lack of spending in that, they've been spending quite a bit of money for very little growth. Is there enough time for the transition to the private sector actually making up for the change? That really becomes the question, and there's going to be a little bit of lag in between there. So how that plays out is just going to be a situation of regional as well as sector, and all of those things coming into play overall. Though you're still going to get a net balance that's going to move the trajectory back towards the private sector, away from predominance of just government spending, and that's healthy. In a broader sense, it could take some time to clearly show itself, but the net effect of it within 6 months, 8 months is definitely going to be obvious, and people are going to like it. So we'll go from there. Treasuries, of course, yield continuing to decline. That's going to push money back into the market. Oil, still high, but the trajectory has been, relatively good. Will we be able to see kind of a smoothing out of that? That's going to be interesting because as demand increases for greater production, you're going to have the supply to keep it from staying at these elevated areas. Not to mention the fact that some of that elevated area is just dollar devaluation. It may never fully correct to a lower number as it absorbs the fact that you've seen a massive devaluation of the dollar within a short period of time. That's been enough to hold the euro up from its collapse, but there is no bright side for the euro within this scenario, even if it's being held up artificially or any other way. The biggest benefit to them, though, is that oil drop, and that means they don't have to convert into dollars for that trade, and that makes a big difference. And you can see gold continuing the move, and this is going to be the expectation that, of course, they think that all Trump's policies are going to be inflationary in a broad sense. I'm not buying that story at all, but we'll see. It really depends on whether or not energy prices can be moved low enough, and that becomes the ultimate arbiter of it. And that's why we watch oil event, and it's pretty straightforward. You can pay attention to that because you see the direct linkage. It's not made up. The cost of energy really impacts where prices move. And it'll be interesting because if you get rid of a significant number of government employees, you soften that side of it, but you also have all these people now who need to find jobs that pay like the government has been paying, which the private sector doesn't do. And so that'll be an interesting one to see how that transition takes place, because it used to be where the private sector outpaced the government, and that shifted some time back and became disproportional. So from a Bitcoin standpoint, in that just still in a little soft area, we're starting to see a little turnaround here. I think that you just had a consolidation of the early exuberance, and now it's going to be relative to the pace of what is viewed in inflation and the utility. And again, we still haven't reached that point where you've got broad-based utility. And it's going to be an interesting one to see how the Trump handles the transition with cryptocurrency and that, because at the end of the day, he's still a huge pro dollar. How do you handle that linkage of having stored value outside of the dollar? And that a little bit contradictory within that. So we can see from a 50K standpoint, really not doing a whole lot of any movement. It's just back and forth, and it's just mostly been related to MBI magenta moving below yellow for those moves. When we look at it from a 50K now, you can see you got a nice spike here of MBI white. So a fade of magenta below yellow at that particular point is going to lead to some selling, and you would expect a move that heads back towards the 50%. However, if magenta stays above, then we're looking at a breakout into new highs in this particular case. But we've been matching highs and continuing decreasing shakeout. So there's been a lot of distribution within the holdup and push of price to new highs. So it's not supported, but of course, there's still a lot of excitement for the private sector now wanting to jump into the market, and they're being sold into by the institutions. And from an intraday standpoint here, we're looking at the European session is blah. Even though Amazon reported and didn't do so well, if we go back and look at it from an intraday standpoint, and we can see the movement pretty choppy, and then too much call buying got in there, and then they drove it back down, and then just reversed it back up post market. Kind of a typical routine, but it's necessary with the amount of options that are being played these days, and that's just part of the normal process. As always, though, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.